Welcome to this video recording where we look at the confidence that marketeers exhibit in measuring marketing performance. Marketeers are no short of receiving various accusations and other negative connotations surrounding their roles. And historically, they have been challenged in terms of their inability to prove value that they deliver in terms of marketing. In other words, that they are not very capable, perhaps, of measuring marketing performance. And even being accused of being a dinosaur, and even a digital dinosaur. So if you run a search on Google or any other search engine, you will see quite a lot of articles popping up where we talk about marketing profession becoming dinosaurs. So, for example, MarTech in 2012, long time ago, right, said, "Are search engines becoming dinosaurs? Traditional ad agencies are." New York University Press talks about the extinction of marketing dinosaurs. The other page, FYR, talks about how to avoid becoming one of this period's digital dinosaur. And Marketing Week, Mark Ritson says that marketeers are clueless about the media effectiveness, and he provides proof. They also say that Radio Center and Ubiquitous' new report forensically laid bare marketeers' perceptions about which channels perform best and the extent to which they were divorced from reality. Okay, so that's what happened in the past. Now let's look at the more recent data and let's discover how confident are marketeers in measuring marketing performance. A study by Al-Qaeda in 2021 on how today's CMO can leverage a return on investment to prove growth, they reported very interesting insights. So just a quick note about the survey. It involved more than 250 marketing executives, directors, and managers, and it was conducted by Propeller Insights on behalf of Al-Qaeda. And among other findings, they found that there was an inability to calculate return on investment, which was hindering many marketing professionals from proving the value of the work. And this study is based also in North America. So key insights, or a rundown in other words, would be this. Firstly, most critical measurement is return on investment. And the survey showed that 96% of the companies use return on investment to assess the effectiveness of marketing, with just over 36% of marketing leaders claiming it to be their ultimate or most important metric. So pretty much all organizations use it, but not everyone agrees this is the most important metric. Now, the other insight is that 84% of marketing leaders are under pressure to prove return on investment when arguing for budget increases or defending their investment strategies. Based on that, you can imagine that this is an urgent challenge that needs to be addressed. If finance doesn't trust marketeers' version of return on investment, they simply won't be willing to give them any budget or increase the budget, and spending will come under even more scrutiny. Ultimately, a company can't run or grow without a strong marketing plan. And that marketing plan needs funding from finance and support from sales. Each department can drive growth of their own, but not to the same degree as when we work together. The third insight is that 61% of marketing leaders fail to use return on investment in decision making because simply they aren't confident in their own data set. So that this figure tells a lot, because as you can remember from previous video, 99% of CMOs are actually kept at night because of proving return on investment and return marketing investment. CMOs will be asking all these questions to the other people we manage, and with 61% of them failing to use this in decision making, that's just not making marketing look good in an organization. Let's agree with this. And number 4 insight, while return on investment is used to assess the effectiveness of marketing by almost every company, 47% of surveyed marketing leaders say that they aren't able to calculate return on investment. We just simply can't do it. This means that almost half of the marketing organizations in North America are judged against a metric they cannot defend. And final insight, confidently calculating return on investment is kind of half the battle. The other half is alignment with critical department stakeholders such as finance and sales on return on investment. And this fight seems just as challenging. Return on investment appears to have a different meaning to each department. In fact, 43% of marketing leaders report that they don't have alignment with finance or sales when it comes to return on investment. So there are several challenges to work on. Let's continue looking at what different studies have found in terms of the confidence marketeers have at measuring marketing performance. So Ruler Analytics, they did a study and they found that just 23% of marketeers are confident they are tracking the right KPIs. So it's clearly an issue many marketeers are facing. But it's always best to check out the actual report in order to get more clarity and prove that's the case. So that's what we will do in a moment. So I have downloaded a study by Ruler Analytics 2021. It's called Marketing Attribution and Reporting Analysis 2021. They have surveyed over 200 companies to get the insight on marketing attribution and also what challenges they encounter when it comes to understanding the data. What is interesting, they discovered an issue with reporting. So they said marketing reporting isn't necessarily difficult. There are tools like Google Analytics that made it easy, relatively easy for marketers to report on simple metric and track actions. And they kind of like in the report began to illuminate the disconnect marketers face between reporting and return on investment. So while reporting isn't seen as a big challenge for marketers, nearly 40% state proving return on investment is the biggest challenge. Why this is the case? They say, well, while marketers can easily track vanity metrics and even lead generation, that's where it ends. When it comes to plotting customer journeys, understanding meaningful actions and more, most marketers are in the dark. And as you can see at the bottom right corner, there is a diagram which shows the biggest challenges as a marketer, and proving return on marketing investment is the second largest challenge, reported by 31% of all marketers. So it's not necessarily the reporting that is an issue, but proving that you get a return and that return is, sufficient. Now, I tried to trace the figure of 23% confidence that marketers have in measuring return on investment. So I digged into the report. There is a whole section about confidence marketers have. So here, for example, we measure how confident are you with your reporting. And they say 21% said very confident and 50% said fairly confident. So they aggregated this and extracted 72% of marketers are confident in their reporting. Then we looked at how confident are you that you can prove marketing ROI, and when they added together very confident, which was nearly 12%, and fairly confident, 48%, they found altogether 60% of marketers are confident they can prove marketing return on investment. So as you can see, there are more marketers that are confident in reporting, and there are less marketers that are confident in proving their return on investment. And this is where we got the 23% figure from. How confident are you that you're tracking the right KPIs, key performance indicators? And they found very confident at 23%, and that's what they reported. However, I was a little bit surprised, because usually when they report confidence in this report, they would add together both very confident and fairly confident. So I wasn't sure why they didn't do that in this case. So I would actually perhaps see this. I would perhaps correct this and say that very confident and fairly confident, if you add them together, you would get around 69% that they're tracking the right KPIs. So basically, the situation is getting better. There are more and more marketeers that are able to prove return on investment. However, or I should say measure return on investment. The challenges come proving it. And there is another study done by Nielsen, which is fairly recent study, 2022. It's always good to look at all these companies because not only they sell their attribution models and all other models to help marketers track their performance, but they also engage with all sorts of studies and so forth in order to give that good content marketing for audiences and prove their expertise. So in Nielsen, in the study, they looked at how can marketers grow confidence in measuring return on investment. The study is actually called Global Annual Marketing Report 2022. This was the fifth, I believe that this was the fifth study that they have concluded on annual basis. So what they found here is that many technology solutions exist to measure and optimize platform-specific and channel-specific marketing ROI. And according to this fifth study, 64%, which is nearly 2/3 of global marketeers, feel confident in their ability to do so. If you break down the 64% included extremely confident and very confident. Now, when it comes to gaining a holistic view of return on investment across the entire funnel, so you don't just look in isolation, particular channel, for example, social media, but you look in general return on investment, say from digital channels or from more marketing activities, that confidence diminishes. And Nielsen found marketers spend more than half of 2021 ad budgets on digital channels and plan to increase their spend significantly over next year, the confidence in being able to prove full funnel return on investment drops to 54%. And in the next couple of slides, I'll show you some diagrams where you can dig deeper into the data. In this study, we also have a section around confidence in measuring return on investment. So here we say that while marketers are most confident in measuring return on investment from, for example, social media, global measurement confidence is only 64%. And they say that across paid digital channels, global marketers surveyed are most confident in their ability to measure return on investment across social media. So 64%. Confidence in measuring social media ROI is significantly higher in Latin America, where 86% said they were confident, and notably lower in Asia Pacific, which is 55%, while North America comes at 59%. And what they say is that in light of the planned increases across social media over the next year, global marketers' confidence in measuring its ROI outside of Latin America is low. And here you can also see confidence in measuring the ROI across paid channels. So it's complicated graph to immediately get an idea what's going on. So you might need to get your head around this. And you can see that, for example, social media, 64% reported that they are extremely or very confident, and the lowest level is observed with the podcasts. Well, this is really significantly growing area of interest and a very important marketing channel. However, the confidence is quite low right now. And there is another diagram which shows confidence in measurement by metric this time. So, for example, 64% are confident, which would include extremely confident and very confident in measuring sales. But less marketers are confident with brand awareness. Then only 54% are confident with measuring full funnel media ROI, and less so unduplicated reach and frequency. As a summary, in terms of measuring return on investment and confidence marketers have, in Nielsen study, they say that only 54% of global marketers are confident in their ability to measure full funnel ROI. Somewhat surprisingly, as 73% of marketers globally express satisfaction with the measurement tools. So the gap between confidence in full funnel ROI measurement and overall market satisfaction presents an opportunity for those companies to focus more on measurement capabilities. Hope you find it useful, and if you like the content, please hit the like button and subscribe to the channel so you always get release of the new content. Thanks a lot for watching.